Charge going up, fire in the hole. Go. 1. Left clear, servers on the right, main floor clear, moving deeper.
Room secure.
Left. Multiple terminals, all live. Drives in, pulling the data now. Package secured, moving out.
In this lesson, we're going to talk about technical analysis tools, the indicators and techniques traders use to interpret market behavior, confirm structure, and refine their entries and exits. Now that you understand price action, structure, and supply and demand, indicators become a way to support your analysis, not replace it. Let's go over the most useful tools that professional futures traders rely on, especially when trading YM and NQ. We'll start with moving averages. A moving average smooths out price over a set period to help you identify the underlying trend. For example, when price is above the 50-period moving average and the line is sloping upward, the market is in a bullish phase. When price is below it and the slope is down, sellers have control. Many traders combine two moving averages, a faster one and a slower one, to identify crossovers. A common setup is the 9 and 21 EMA. When the faster average crosses above the slower one, momentum shifts bullish. When it crosses below, momentum turns bearish. Next, let's talk about RSI, the Relative Strength Index. RSI measures momentum by comparing the magnitude of recent gains and losses. It ranges from 0 to 100. A reading above 70 means the market is overbought and may be due for a pullback. A reading below 30 means it's oversold and may be due for a bounce. However, RSI isn't just for spotting reversals. It's also excellent for confirming trend strength. During strong uptrends, RSI often stays above 40. During downtrends, it often remains below 60. Watch for divergence too. When price makes new highs, but RSI fails to follow, that can signal weakening momentum. Another essential tool is MACD, the Moving Average Convergence Divergence Indicator. MACD shows the relationship between two moving averages and visualizes momentum using a histogram. When the MACD line crosses above the signal line, momentum shifts bullish. When it crosses below, momentum shifts bearish. The histogram helps you see how momentum is building or fading before price actually turns. Next is VWAP, the Volume Weighted Average Price. VWAP is heavily used by institutional traders. It shows the average price of an asset weighted by trading volume throughout the session. When price is above VWAP, it signals buyers are in control. When it's below, sellers dominate. VWAP also acts as dynamic support or resistance. Price often reacts when it revisits it. On intraday charts, VWAP helps you stay aligned with institutional positioning, the levels where the majority of volume has transacted. Another powerful tool is volume profile. Instead of showing volume by time, volume profile shows volume by price. The horizontal histogram on the side of your chart, the longest bar known as the point of control, POC, shows the price level with the most traded volume. Price often gravitates toward or reacts strongly around this level. High volume nodes show areas of acceptance, places where the market spent time and built consensus. Low volume nodes show rejection, zones price moved through quickly and often retest later. These volume tools give context to your structure and supply true demand zones by showing you where real participation occurred. Finally, let's talk about Fibonacci retracements. Fibonacci levels measure potential pullbacks within a trend. The most commonly used retracement levels are 38.2%, 50%, and 61.8%. For example, if NQ rallies from 15,000 to 15,400, a 50% retracement would be around 15,200, a level where traders often look for continuation entries. When Fibonacci levels align with structure, moving averages, or demand zones, it adds confluence, and confluence increases probability. The key to using technical tools effectively is to simplify. You don't need a dozen indicators cluttering your screen. One trend tool, one momentum tool, and one volume-based tool are more than enough. Remember, indicators should confirm what you already see in price, not tell you what to think. Price action is your primary language. Indicators are translators that add clarity when you need it. In the next lesson, we'll connect everything we've learned by talking about time frames, how to use multiple time frames together, choose the right one for your trading style, and align your entries with the bigger picture.